Article 37. Value of deemed supply. This article specifically addresses how to calculate the value of a supply when it is classified as a deemed supply under the UAE VAT law. A deemed supply occurs when a taxable person purchases goods or services with the intention of using them for taxable supplies, but ultimately, the goods or services are used for other purposes, such as private or personal use. Use in activities that are non-taxable or exempt from VAT. Since these situations do not involve a regular sale with an actual price paid by a customer, special valuation rules are necessary to determine the value of this supply for VAT purposes. 1. Scope and applicability. This article applies only in cases where goods or services were originally purchased by a taxable person with the intention of making taxable supplies. Instead of using those goods or services for taxable supplies, the taxable person either uses them for purposes that are non-business related, example, personal use by the business owner or employees. Uses them for purposes that are exempt from VAT. Transfers them to activities or divisions that are not subject to VAT. This provision applies regardless of whether the supply is a domestic supply or relates to imports. 2. Exception to general valuation rules. Article 37 creates an exception to the general valuation rules laid out in Article 34, which covers the value of regular taxable supplies. Article 35, which covers the value of imports of goods. Instead of using the price charged to a customer, because there is no external customer in a deemed supply, the value of the deemed supply is based on the actual cost incurred by the taxable person to acquire the goods or services. 3. Valuation method for deemed supplies. The value of the deemed supply shall be equal to the total cost incurred by the taxable person to obtain the goods or services. This cost would typically include purchase price paid to the supplier, import costs, if applicable, any associated costs related to transportation, installation, and commissioning, any taxes, duties, or fees, except VAT itself, paid at the time of purchase or import. This ensures that the taxable person accounts for VAT on the full cost basis, reflecting the economic value of the goods or services that were effectively consumed outside of the taxable business purpose. 4. Importance of cost documentation. To comply with this article, the taxable person must accurately record all costs incurred in relation to the goods or services that become the subject of a deemed supply. Maintain clear records that distinguish intended taxable use from actual non-taxable or personal use. Be able to demonstrate how the cost-based valuation was calculated in case of tax audits or inquiries from the Federal Tax Authority, FTA. 5. Why this rule exists. Policy rationale. The purpose of this rule is to ensure that VAT is collected even if no monetary transaction occurs, since the taxable person benefited from the goods or services. By requiring VAT to be calculated on the full cost incurred, the system prevents businesses from claiming input VAT deductions on purchases, only to then divert those purchases into non-taxable uses without accounting for output VAT. For more details, contact us.